Hi, g'day traders. Sam here from TradetoProspa. Today is Tuesday, the 24th of January 2023. Here to give you a Bitcoin update. What I have here is a chart on Bitcoin from a Stan Wyckoff perspective, which is the 30 weekly moving average, along with the daily 200 moving average. And they seem to be aligned. If you can see, they're both aligned. So interesting. Something I learned when I was covering that topic. What do we have? We have two parts of this big picture. If I was to show you the prevailing trend line, which is this red one here, it has a number of touches all the way through. So that's our pivot points, and you can see the weekly candle closing there, and then we find this support level. So this prevailing trend line, if it breaks, it's going to go down deep, and this is the area that I'm expecting if it goes down, if it breaks that trend line. However, everyone's bullish, and I'm bullish at the moment up till this point though. So now we are at a key level. Why is that key level? Well, let's cover that. So let's go back to the candlestick, go to the monthly chart on my right. So the monthly chart on my right, let's just get that. We have our monthly level, and I'll use this monthly level here. There's a few monthly levels obviously. So if we were to apply the method, where's the that's there. We can use that for another monthly level candlesticks, the body of the candle. So big picture perspective, and the other monthly is obviously down there, and we have one here as well. So it's acting as support, the monthly, and the other monthly is acting as resistance. However, this prevailing trend line is also coming into effect. The Stan Weinstein theory pretty much shows that when you break the 30 weekly moving average, it's becoming bullish. So that's or the daily 200. Here, when we break the daily 200, we made a big move to the upside, and you can see this prevailing trend line as resistance. It's called the inverted bump and run strategy. If we break above it, retest, and then we up. Okay, so key point is breaking above it. So this is a monthly perspective, a weekly, sorry. And the other weekly is that we look at RSI and use that as support for the theory. So that had it there. So you can see how I got my trend line using the RSI. Similarly, I did the same here. Okay, so that trend line is there. However, that is a breakout. It's not going to help us with the prevailing trend line. So this point reflects here. This point reflects there, and this is a bit, the RSI doesn't help us here at all in that perspective, except for the one I've just drawn. So from you can see this now, right now, it is looking like it wants to curve down, but that's in the weekly candlestick. I'm going to give an example. Well, I've given you examples why this is a strong resistance. Yep. And what's likely to play out and how we trade this market. All right, so I just wanted to give you that background. Now moving to the other chart. Actually, yep, that's what I wanted. We go to the daily, and I'll show you how I got my prevailing trend line and how close it is. So I see some people use this wick. If you use that wick, then the trend line actually becomes different. It becomes support, right? Support there. So you might argue there, that's the right one. I'm thinking I'll leave that there for a sec. What I'll do is I'll make a dot and just leave it there. Well, you can see how I did it. Um, there we go. The body of the candle, wick there. This seems to be very flush with my line. So I got 2 points of reference, and I'm playing the devil's advocate, and I'm finding that as resistance, right? So if that's resistance, it needs to go against it and break against it. There is a picture for this. If I was to bring it out, it doesn't quite do that. Okay. So what I want to do is bring up a picture for you. Give me a sec. It's one that used to travel the internet a fair bit. Okay. Where'd it go? Give me a sec, guys. So here it is. This is the bump and run reversal bottom. Now we can see this sort of that bottom structure, and we are likely to do this, get a rejection. That's my thinking until we break above it. And when we break above it, it might retest it, and then up it goes. How high it goes, that's another story. But this is what we're looking at, this strategy. So moving on to this, I believe that in a small time frame, we will get a rejection, and the rejection will be based on that this is a wave 5, and then we get an A, B, and probably a C down to that level there. That meets a criteria. If we were to look at it closely, we have our Fibonacci here, and based on this wave, the 0.618 is there. That's the worst case scenario, and I think it's probably likely to do that because this is such a strong move. We'll probably get a bit of a sell-off, and the resistance is there. We cannot go bullish until we break this trend line and break this level, the monthly level. It can't be bullish. And if we do that, it's going to be significant. This is not going to be a problem after that. That's my thinking. Obviously, we'll put it as a reference 1 for this fib structure. You can see the 618 was there from that perspective. Anyway, now, what scenario am I looking for? Well, I need to go back to history and give you an example. So let's zoom back. And I had this example here. I think it is the example. Yeah, that's the one. Let's do, okay, perfect. I recall this a while ago. I remember looking at that, and this is when I come across the strategy. You can see good definition of resistance, and we got it. So we had 1, 2, 3, 4. That is a good resistance trend line, and this is where when you break it, it becomes significant. So in our case, we don't have it, but we don't have that many points, but we're going to use it with an assumption. So you can see how that pulls back, and it pulls back based on a Fibonacci to a 618 level. All right. So this one pulls back to the 618 level, give or take a bit. If we remove the wicks, use the body, we should be fine, like this one here. And it's still just missed out, very close. Interesting. However, if I was to do that, it makes it even closer, doesn't it? Yep, that makes it better. There we go. And so what we had here is, I recall looking at this and going, why is it going up? There's a strong trend. That doesn't make sense. Then I come across this strategy and I go, okay, that makes sense. So this pulls back. It does its A, B, and a C move. So this is a wave 5. And then up it goes, does another 1, 2, 3, 4, 5 move, wave. So looking at that example, that fractal, we might get a pullback and retest. And this one was on the 0.382. And you can also see that we have a bit of a symmetrical triangle before it breaks to the upside. That example, I think is a good one. And let's go to the current price here. So we're doing the same. I do feel like there is going to be a bit of a pullback. It might be for a few days, but eventually I think it will pull back and then get enough buyers, because there's a lot of buyers looking to get in, and I don't think anyone's going to come in at this level. So the people that came in late probably will sell, and who knows what the strategy is, but I think this is what we're going to look for: a pullback and a breakout. If it gets a rejection again, this is going to pull back deep. Two attempts, and if it gets rejected, it's going to pull back deep. If we get support here, then we can see that, and it breaks this, we're going to use the monthly as a resistance, come back here. It could do the retest like I showed you in the previous example, and then up. And that's symmetrical, or a rising triangle, perfect. This is going to give us a prevailing support trend line, and if it breaks that, it's going to go down deep. I think that will be another level. Maybe we'll attempt it, maybe not, but then it will come back down, and this is where we're going to have the bad scenario. This is playing the bearish scenario, and then I'll be looking for further downs. I have a theory, I might be wrong, but here is the deal. We have a known strategy, and the strategy is that this is a swing trade. That's our A, that's our B or C, or you can do 1, 2, 3, and then we break. That strategy works once you break that level. All right. So once that breaks, that's our method. You can see that that's also a broadening wedge. We might even come back for point E. So that could be point D and point E, somewhere around there. The other one is that's an inverted head and shoulders. So that could be another one. So you can see the bullish scenario once we break that level. The bearish scenario is that is our point A. This is our point B, and point C is down here. And we just further come down, and then we'll look for a reversal. This trend line then becomes more significant with the rejections along the way, and so when we break that trend line, that's going to be a significant trend line. Does that work into this scenario? Yes, it does. I shouldn't touch that. Let's just put that back. So that is the bearish scenario. This prevailing trend line, if we lose it, it's going to go deep into point C. We don't know where point C is, but we can then assume that this is wave 3 on the macro. We're going to assume that that's 1, that's 2, then this could be 3, this could be 4, and then wave 5 is further down, which is our point C. So that is the bearish scenario. This looks like a Wyckoff accumulation, selling climax, double test, secondary test down here. We might get a spring or spring down here and then break up. So this could be a macro accumulation. It is a very complicated area. SP 500 is looking to go up. If it goes up more, then I see this going up. If SP 500 gets a rejection, I see this coming back down. That's pretty much it. Hopefully this helps you out to approach this market, but it is difficult to predict. We have our scenarios, and the stock market is going to determine if the Fed keeps taking out some cash out of the market, then things are looking up. Until interest rates are at a certain rate or inflation rates at a certain rate, then they might just, and if we're in a recession, they might just print more money, and this just pushes price up again. That's it, guys. Hopefully you like what you see, gives you some things to think about, and please give me a like and share. Talk to you soon. Cheers.